look at what we should be expecting from the local market. Stan Shamu joins us from IG in Melbourne. And Stan, at the moment, SPI futures pointing to a positive start, but it doesn't take into account some of the extra data we got out of China over the weekend and also that Westpac result.
Morning, Kate. Yeah, absolutely. At the moment, we're currently looking at a fairly flat start for the Australian market at about 5,409, and that's just a couple of points lower than where we closed on Friday. But it does seem like there's a little bit of a positive lift across the board. We've got the risk currency space opening a touch higher. We had the Aussie coming in at about 94.5 after closing more towards that 94.3 level. So there's a little bit of positiveness coming in. We also had a pretty solid session for iron ore, which is up 2% plus. So this should be supportive of some of these iron ore names. BHP's ADR is already pointing a bit higher, but perhaps we'll see some of these iron ore stocks extend their gains at the open after a prolonged sort of spell of weakness for iron ore, which is now seeming like it's reversed a little bit. A concern will be, of course, for the gold miners, the precious metals struggling. Of course, it's all about tapering, and with expectations of tapering by the end of the year starting to ramp up a little bit, then possibly gold is in for a further near-term weakness. That Westpac result came in relatively in line with expectations. Cash profit of about 7.1 billion. Expectations were about 7.08 billion. So it's slightly ahead on the cash profit front. But the dividend was in line with expectations at 88 cents and that special dividend of 10 cents as well. So there's not too much going on there in terms of beats on the main matrix, but net interest margins were a touch weaker. This is despite Westpac maintaining a fairly high interest rate compared to its peers as they look to protect their margins, and of course they continue to have a fairly strong loan book, and the positive commentary around the economy and their expectations going forward might be something that will give the stock a bit of a lift. They are seeing some strong signs from a credit perspective, with consumers a bit more happy to borrow at the moment after a long period of declining interest in that department. So this might be able to help Westpac continue its run. The stock's up about 33.2% for the year, so we really need to see some strong numbers for some of these banks for them to maintain their run. At the same time, we've got a situation whereby some investors will be looking to take profits after that big run-up last week. We might see it challenge those highs from last week, but at the moment it's still a little bit uncertain how this result will be received by the market.
Stan, what about Forex markets? We've seen some strength in the US dollar. What's been the main driver behind that?
Yeah, the US dollar, it's all been about tapering talk over the past week. Of course, yes, last week we saw towards the end of the week, that is, those ISM numbers come in much better than expected and really helped traders add their US dollar longs, and this has helped a lot of the Greenback sentiment. We had the dollar index bounce off 79 last week, which is where it bottomed out, and now it's well above 80 at about 80.72. So the US dollar is definitely in good stead, and this has really cost a lot of the risk currency pairs like the Aussie dollar and the euro, which have declined significantly over the past few sessions against the Greenback. There was also some Fed members on the wires just talking about their expectations of tapering, and I suppose James Bullard, who's one of the well-documented doves out there, was out on Friday, and he didn't even rule out QE, tapering by the end of the year. So it does seem like with Fed members not looking to rule out QE tapering at all, then this does give the US dollar further impetus in the short term, and with some further commentary from Fed members this week, then perhaps expectations will remain to the long side of the US dollar trade.
Okay, Stan, what are you watching in terms of Aussie levels today? We've got a stack of data out, including retail sales, and then some more data later on in the week. What levels are you watching there?
Yeah, for the risk currency pairs, I'm more looking towards selling into strength at the moment. Of course, they've been sold off quite drastically over the past few sessions. So with the Aussie, for example, I'll probably expect it to run back up to that 95 level before looking to sell the pair again. Today we've got the ANZ job ads, we've got retail sales, and the house price index all out at 11:30. So perhaps this data will give the Aussie a bit of a kicker in the short term, but I still do expect the underlying US dollar strength to weigh on the risk space sort of towards the back end of the week. Of course, we've got some payrolls numbers as well out of the US, and they probably will be something to look out for, along with the Fed commentary, of which we've already heard some of these Fed members say they're seeing a fairly good enough improvement in the jobs market. So it should be interesting to see how the market receives this data, but should it help the US dollar maintain its run, then we'll probably see these risk currencies sold off heading into the end of the week.
Okay, Stan Shamu from IG, thanks so much, appreciate it.
Cheers, Kate.
All right, time now to take a look at the big news out today. Westpac's full year result and its profit jumped 14% to